are cooked. And they've been cooked since October of last year. Almost 6 months, almost half a year of chop and going absolutely nowhere. If you've been following me on this show or you've been following me on X at the Ron AV Show, you know that I've been talking about the markets being in very big trouble since about October, November time, in which we had a pullback in November. And now we've had another pullback in the overall markets. With the overall markets, if we come over here, we can see that the markets ended very red today. And if you remember on Monday, the markets were super red and we had a big drawdown on Monday in overnight markets. Monday and overnight markets, we had a big drawdown on the SPY, the IWM, the QQQ. The IWM was like almost 4.5% down due to oil spiking and Iran worries. In this video, though, we're going to go over and talk about where I see these markets going right now. Is it an opportunity to be buying right now, holding cash right now? What should you be doing as an investor or a trader? We'll go over that. We'll go over my framework and my system and what I'm personally doing. And then finally, we'll wrap it up with, just talking about what's really going on in this market and why. So let's just jump right into it. So like I said in the beginning of the video, since October, you can see on this chart, since October right around here, this is the SPY we're looking at. We were in a range about 65, 6,700, and we're still at 6,700-ish. And as you see, we've gone absolutely nowhere, just chop, 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 chop in this sideways movement for almost half a year now. The NASDAQ 100 is the same exact thing. Here's October around 24,500, and here's present day at 24,500 today. And then obviously today we had a big down day. And to get into the charts, to get into the actual charts to see what is going on with these markets and where I see things, we'll hop in here and we'll see that today alone, we had a very big move down this 15-minute chart. And to close the day, the last 15 minutes of today, we saw a massive selling of volume. About 1.43 million versus the average 444,000. So we more than 3x the average volume for a 15-minute candle in the last 15 minutes and just sold off. We sold off right into the close, which is never typically bullish, okay? Never typically bullish. If we go to the weekly chart, I want to show you what I'm seeing and what I've been calling out since about the beginning of October. Move myself again. So this is the QQQ, and we can see that since the beginning of October, again, we've been in this chop range on a weekly chart on the Qs and the SPY. Just chop, 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 right? And what we've had with my indicators is we've had a bear trigger back here in 2025. We chopped, and then we had a bearish cross of the 9 EMA through the smoothing line, and it flipped red back here, telling us that things were not okay. And then we had Tariff-geddon, right? And then we had a flip back to bullish and a bull trigger, and this is where you made all your money in 2025. And now in 2026, we're seeing the same thing. Bear trigger, red high 5 long indicator, and a bearish cross back in the beginning of February. And then we've been going down. We've had this pullback, and now we've had this pullback. Now, what is the key difference between this pullback and this pullback so far? And why do I believe that it's not just going to be a snapback up to highs? And I believe that we're actually going to go lower to retest this previous resistance back in 2025. Why do I think that? One, you have some volume gaps here. But the biggest thing, when we dive into my indicators a little bit more, we are going to see that here, when we had this first bear trigger and moved down, we never got a bearish cross in here. We never got a bearish cross on the high 5L indicator. And we were up above the zero line on the flow. The flow tracks your volume. The flow is the volume. So the volume was super bullish from here to here. But in Tariff-Geddon, it flipped and went super bearish and we went down, right? Here was just a pullback because we are still bullish on the overall volume. But now the big difference is we've had a bearish cross. We are coming down. We've retested that 9 EMA multiple times, guys. Multiple times. Here, let's zoom in here. Look at this. 1, 2, 3, and this week makes 4. 4 times we've retested since we crossed down 4 times, and we were rejected every single time. We're also rejecting off this massive volume shelf with a volume gap down below to 565, and then another gap down to about 532. So this is all leading me to believe, okay, I don't believe this is just going to be a pullback. I think this is going to be a top to bottom, 10 to 15% correction back down here to 2025 highs before we bounce, bottom out, and then continue higher back into all-time highs before the end of the year. My opinion and my timeline in my head for all of this is in the next 4 months-ish, we are going to have this from peak to trough, 10 to 15% drawdown correction in the markets. And then going into summer or before summer, we're going to bottom and start climbing higher. That's my prediction. That's my opinion based on everything I'm seeing. And another reason I think that is because if we look at my other indicator, the matrix, this was 2025. This was 2025. We came here and then we had Tariff-Geddon and then we bottomed out here in the sweet spot, as I call it. Here, right, we're coming down and now we're pushing down. And I think, again, we bottom out down here in the sweet spot for a 10 to 15% correction from the highs, from all-time highs. And I believe that the SPY is the exact same. And we'll get into more why I think that going over some news, because it's not just about the charts, it's also about the news. But as you can see, things are playing out exactly the same as they did before. Exactly the same. The one thing that actually worries me the most is that look at this volume. There wasn't a lot of buying volume in here, and then the selling volume came in droves. Here, their selling volume came in droves. And we went down. Here, we actually have more buying volume than selling volume. Yet we're still down 7% on the Qs from the highs. All this buying volume, they're beating out the bulls consistently, but we're still down. That's basically like the bulls are sitting there and they're trying to fight. They're fighting. They're winning in the fight, in the volume. But it's just still too much. They're still getting pushed back. And eventually, they're going to get KO'd. They're going to get knocked the fuck out. And when they get knocked the fuck out, we're coming to 580, we're coming to 565, and then we're coming to 544 if we get down there. Those are the levels to be watching out for. 580 is November lows. 565 is this volume shelf here in this resistance and support area here. And then 540-ish is that 15% correction in this previous. And then, we broke out of that. So now we're coming back to make it turn into support and then climb higher again. And this just constantly happens, guys. You have resistance. Let me zoom in on this. You constantly have this market structure. You have resistance here before the bear market, resistance again here, you pull back here, or you bear market here, correct here, and then you come back to retest this area once or multiple times before you flip it and it says, okay, now we're going. And now you're at this area again where, guess what? You're coming back down to this area to retest it and then eventually flip it back to the upside. And the reason I think tomorrow we'll have more of a sell off isn't just because of that volume we saw. It's also because if you follow the volume, if you pay attention to the volume, guys, every single time with the volume, guys, we have, let's see, notice what happens here. We bottom when the volume spikes. Volume spikes, volume spikes. Look at these arrows as they go up. Volume spikes, volume spikes, volume spikes, volume spikes above the rest, and definitely above the average. That's when you typically bottom. That's when you typically have a local bottom. Like these have been local bottoms because we have gone up and then came back down, gone up, came back down, gone up, and now coming down lower. So breaking this support in here. But also, or you have a hard bottom being, okay, we pulled back, now we're on the up and up. And then we have a pullback, okay, now we're on the up and up, have a pullback, on the up and up, pullback, up and up. You get the picture, right? But then you start chopping sideways in here, local bottom, local bottom, local bottom, local bottom. But then eventually, look what happens. You break down, you snap back to retest the breakdown, and now you're falling. Now you're falling, and there's no one there to catch you. And you haven't had a break up to here or something. You've had consistent buying, selling volume all in here. You need volume more times than not, as you can see, more times than not. You need volume to come up here and be above the rest of the days to have like a capitulation day with volume. Say tomorrow we come down here, the volume comes up big, and then you snap back up. That could be the day that you get like this green right here where it's like big down, then big up, and you have that capitulation and you have a bottom. I think that could possibly happen for another local bottom just because we are a bit oversold at this time. That could possibly happen tomorrow or Monday. We could have that massive volume spike tomorrow or Monday and then be back on the up and up. But again, I don't believe we go too far. And then I do believe we probably go down further. Depends though. If we come down here to these November lows, that could be all. That could be all. That'd be about 6.4% from the highs. And that feels a bit light for SPY. That feels a bit light. That would be a total of how much for Qs? That would be about, let's see, it'd be about 9%. Could not. It depends on some other things as well. But again, I do believe overall that the sell-off is not over yet. I could see a local bottom down here around November lows or maybe even not November lows, maybe this low from Monday around 660. And then we have a local bottom, snap back up, and then sell back off, just continuing the lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and just this structure continuing to climb down. So that's for the charts. That's what I'm seeing, guys. Again, overall, been talking about this for a while. Ever since we got this bearish trigger, I've been, pulling back on trading heavily. We're in storm phase, as I call it. And that's where we're only trading no more than 25%, 30% of our portfolios for trading. For investing, we've been trimming up here and we're only adding to areas of the market that have already been super sold off. Like areas like IGV, SaaS companies have been super sold off down to this key support level. So we've been buying stuff in SaaS, in tech services. We've been buying stuff in fintech, right? We've been buying like Robinhood and SoFi and companies like that because they're already in like this bear market. IGV's already in a bear market. Cyber's already in this bear market. Sky's already in this bear market. Big, huge pullbacks, big, huge drawdowns already. While a lot of other stuff in the market is still very extended and hasn't had its pullback yet. Like drones and stuff are still very extended. Some of them have had pullbacks. Space is not had a pullback yet. XAR, just these different ETFs, they're very extended and they could fall. The biggest one though, the biggest one, we've seen fintech fall, we've seen SaaS, we've seen cyber, we've seen a lot of different sectors across the markets fall and be in a bear market. The last sector, I believe, semiconductors. Semiconductors have not had that pullback yet. And we're talking about stocks like NVIDIA and AVGO and TSM, Taiwan Semiconductors, and AMD and Micron and all of these semiconductor companies, memory companies, whatever, that have just been running or holding up very well. And they are very highly weighted along with other tech companies. And the thing about it is, if the semis and especially NVIDIA fall, tech will fall more. The overall markets will still fall more, even though a lot of these stocks and overall sectors have been beaten down. But I've been buying in the weakest of sectors, just nibbling in dollar cost averaging. My framework, if you want it, you can go to valuesnapshot.io. I talk about my framework there. You can get a 7-day free trial. My framework is all about buying when stocks are severely undervalued and whenever they are severely oversold. That's when I buy half a position. I buy the second half a position whenever we get something like this. We get a bull trigger and a flip on the high five long indicator. That's when I say, okay, I'm buying my second half of position. That way I can be with momentum. Okay. So I'm buying the first half just based off fundamentals and the RSI being oversold. I'm buying the second half strictly based off momentum and my indicators. That's it. That's what we do. That's what we do over at valuesnapshot.io. 7-day free trial, then less than a quarter a day. We got articles, we got stock tools, investing tools, we got it all. So if you want that, again, you can go over to valuesnapshot.io. I'll link it in the bio below. But look at this. Look at semiconductors. Again, if we want to compare, let's compare. Let's sit here and say, okay, Ronnie, well, we had a bear trigger here and we didn't have a bullish cross here, and we only went down basically 3 bars. We went down about 9-10%, and then we bounced. And here we are again, but what's the key difference? The key difference is bear trigger. Okay, that's similar, but you are making a bearish cross and you already crossed down. Now you're retesting and rejecting that 9 EMA. Not only that, guys, but back here, you had a positive flow. Here, you have flipped and you have a negative flow below the zero line. You're making a purple histogram here. That's similar to before. So yeah, some things are similar, but other things like this really mean a lot. Because last time you flipped this, look what happened. You flipped this and you went down big time. See that? Here, you flip it, you might be going down big time. Along with the overall market and how it looks, I believe semiconductors are the next domino to fall. And I think that brings down the market to those levels I was talking about before. Now let's talk about what is causing all of this. Well, we already know about Iran. And it's funny because Trump was saying that, the war was over. We beat Iran, blah, blah, blah. And then as soon as he's saying that, they go ahead and hit 2 U.S. oil tankers in the Strait of Hormuz. And they're on fire and all this stuff. And it's right after he says that. And it just causes what was the sell-off today. This is one big thing. My opinion about everything that's happening with Iran is it's a big move against China. China's biggest constraint is power. And U.S. taking over Venezuela took some of that power and oil away from China, right? Or just gave U.S. the ability to control it. Then the Iran situation takes over half the half of the total percentage. So basically over 50% of the oil and power that China relies on. Now the U.S., because of their stuff with Iran, if they take over the Strait of Hormuz and that they took over Venezuela oil, they would have control over half of China's oil oil that they need for power. Because of that, now the US has, a huge bargaining chip against China. And it makes China also not be able to move against Taiwan, which basically the US doing what it's doing with Iran and securing that oil is about the same thing as China moving against Taiwan and securing these semiconductors, because out of Taiwan, about 60 to 70% of the world's semiconductors come out of that. So it's a huge game of chess. Now, I don't agree with any of it. I think it's all stupid in politics and blah, 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 whatever. Not trying to get political here. I'm just giving you like what is going on and then my opinion on why this is going on. I don't believe it's about the Iranian people or, got to stop them from having a nuke and blah, blah, blah. Like, I don't believe that because they already did that. They already bombed the nuclear site and then didn't do anything else. Now they're doing that and more. I'm trying to overthrow the government and blah, blah, blah. Anyways, that's what I believe is happening. And whenever Trump was sitting here and we had that huge rally on Monday when Trump literally said, well, the Iran war will end very soon, predicts lower oil prices. Well, he said that and markets ripped on Monday from basically red to huge green. So 4%, 4.5% IWM was down overnight. Then it ripped all the way up to being up 1 to 2% on the IWM. And same thing with like QQQ, NASDAQ, SPY, SP 500, all that stuff. And then I sat there and I said, this is a huge trap. He's saying this and it's causing a short-term rip in the market. And I wasn't buying it. And I was on X and I was sitting there saying, this is bullshit. Like, this isn't, I don't think this is going to be over soon at all. Because now my opinion again is a play on China and making sure they don't have enough oil or the US has some sort of constraint or leash on China. If that's the case, which to me it's the most logical thing. If that's the case, then we have that the US cannot just up and leave Iran. They cannot just sit there and say, okay, they have to see this through now. Because in my opinion, again, if the US just leaves Iran right here, right now, it is too easy for China to walk in the back door and say, hey, we're going to help you rebuild. And then they're like this with Iran, buddy, and all that oil can come their way. And you didn't stop you didn't constrain China's oil or their power, and you didn't stop them from doing anything. Because China's main mission here, ladies and gentlemen, if you've read The Changing World Order by Ray Dalio, China's long-term mission here is to be the world power, is to be the next world power after the US. The way you get to be the next world power is by being the world's currency, which currently is the US. Before the US, it was Great Britain. Before the Great Britain, it was like the Norwegians or something. And every single time that it's changed over, it's been by war. So again, the US doesn't want to lose it. You never want to lose it. And the US is sitting there doing everything it can to not lose it. So again, that bleeds into why I believe that this whole move is going on. And so the markets pop because the war is going to be over very soon and predicts lower oil prices. Then yesterday they bomb and hit 2 U.S. oil tankers, and then they mined the Strait of Hormuz. Iran did, and here we are today. The markets are down because it's like, oh wait, no, it's not over soon. Trump was lying, blah blah blah. And then Trump today tweeted something like on Truth Social. He said something like, what did he say? He said higher oil prices or something are this is all bullish for oil prices or something like that. And it's just so funny because first he was saying predicts lower oil prices and the war will be over very soon. Then today things didn't go his way. And now he's saying, oh, well, actually, this is all bullish, which it's not. It's definitely not bullish for the American people. Do you know what happens? That oil's spiking again over $94 a barrel. What happens is it's not just the gas prices that go up. It's not just the gas prices that go up with oil. It's also the gas prices that go up with oil and the diesel that goes up with oil, but then that has ripple effects on anybody that's moving cargo with trucks, moving cargo with 18-wheelers, moving cargo with boats, moving cargo with anything. Anything that's in motion, trains, cars, automobiles, planes, it all goes up in price. As that goes up in price, it means it's more expensive to move food, it's more expensive to move anything. As that happens, it's not just going to be eaten by the companies or the movers. It's going to be distributed out to the consumer. So what does that cause? That causes inflation. You see where I'm going with all this? Oil prices are high, which cause inflation, but also cause ripple effects to make products, food, clothes, medicine, so on and so forth, more expensive because the companies aren't just going to say, you know what, we're just going to eat these bad margins. No. They're going to pass it on to the consumer, just like with tariffs. So you also have FOMC meeting next week. Yep, that's next week already. And they're deciding on whether to cut rates or not. I don't believe they're going to cut rates. And I believe the Fed Chair Powell isn't going to be dovish either. How can he be dovish with everything going on with oil and him knowing that this could all cause higher inflation? So I don't believe they cut. I don't believe he's dovish. I think he's either neutral, which he's usually never neutral. I think he'll be more hawkish. And if he's more hawkish, that's just another thing on top of this market that brings it down. And everybody's biggest thing about this market right now, they're just like, everybody seems bearish. We're going to bottom soon because everybody's bearish. No, not everybody's bearish. Okay? If you follow stocks, if you're on X, if you're on YouTube, you are in this echo chamber. In this echo chamber is a very, 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 very small portion of the world. A very small portion of the world that sits there and actually gives a shit about stocks, actually gives a shit about investing or trading. A very small portion. So yes, in our echo chamber, we are seeing a lot of bearish people, but I'm also seeing a lot of people saying, because, oh, well, we're already down a lot and yeah, we're going to rip back up soon because that's what we've done every time for the past few months. And that was the same thing being said in the beginning of February. And then eventually one of those times we don't rip back to all-time highs and we just keep going lower, lower, lower. And then people were like, no, we're going to go back up. No, we're going to go back up. No, we're going to go back up. And then we just keep going lower and lower and lower and lower and lower. And today was the first part of that. Today was the first part of that because for a while now, on the SPY, we've seen what? We've seen move down, gap downs, and then moves right back up, moves right back up, moves right back up to fill the gap, moves right back up to fill the gap over and over and over again. But now you're breaking below these lows and your moves back up are becoming lower highs and lower lows and just keep on building that structure down. To make it very simple, let's just do this. Let's do that. Let's do that. There we go. Do you see what's happening? We're up and we're an uptrend, but now we rounded off and now we are going into a downtrend. Do you see that? We were pullback and then uptrend and now rounding over and now we are in a downtrend. And this is going to stay the same until we break out of this line basically and say, no more, we're not in a downtrend anymore. And then we start climbing like that, just like we did here, right? This is a downtrend, and then we broke up and out, and then we started moving higher, but still it was more so chop, right? So again, that's how I see things right now. That's one portion of what's going on. And obviously FOMC next week is going to be huge. And the whole Iran thing is just going to continue to go on, in my opinion. I don't think it's going to be over anytime soon. He originally said September. They're looking at things being over, and that's probably more accurate. They're definitely going to want to get things wrapped up in Iran before midterms, because if they don't, they're definitely losing midterms. Another thing, before we wrap up this video, and then we'll talk about, like I said, what I'm doing right now. Another thing is veteran fund manager George Noble warns that a private credit crisis may be unfolding in real time. This is something that's been being whispered about. No one's really talking about it too much, and I think this could become a very, very big issue. And the reason I believe that is because you already have Morgan Stanley and BlackRock limiting withdrawals. Is private credit gating a crisis or market stabilizer? So think of that. Morgan Stanley and BlackRock are limiting withdrawals. Companies, businesses are coming. People are coming to them saying, I want to pull my money out. And they're saying, whoa, we have to limit you. We can only do so much right now. Doesn't sound so good. It sounds like running on a bank. When banks get run on, meaning everybody goes to the bank at the same time to pull out money, they have to limit people because they're like, we don't have that much money right now. It's what happened when Russia invaded Ukraine, right? So the 1.8 trillion private credit market is facing a critical liquidity test as Morgan Stanley and BlackRock move to restrict investor withdrawals. Though industry experts tell Benzinga these gates are functioning as structural stabilizers rather than a sign of collapse. Well, obviously, they're not going to sit there and say, oh, yeah, we're limiting because shit's really bad right now. Yeah, no duh. Of course, they're going to say something else, right? So I'm not paying Benzinga to read the rest of this. You get the gist. So these are things that I'm seeing right now in real time. We have what? Let me talk to you. Let's see. And then crypto, remember this as well. Crypto has already seen a bear market. From crypto's peak, they went down 52%. Okay? 52%. The last time they went down this much was in the bear market of 2022. They went down, how much was it? They went down 77%. During this bear market, so November 2021 to November 2022, what did the NASDAQ do during this time? QQQ. The NASDAQ fell 36.5%. So Bitcoin fell 77% during the bear market in 2022, and they started falling in 2021. The Qs were delayed by probably like 3-4 months, and they started falling in 2022, and they fell half. They fell half of what Bitcoin fell. Okay? So, if that was the case again, Bitcoin has fallen a peak to trough of 52%. If the Qs are going to follow this, then they will fall around 20-some percent. If they fall 20-some percent here and follow that path, just like they did in 2022, then we're not looking at 15% peak to trough. We're looking around the $500 range. $500 on QQQ, and today, the NASDAQ 100, and today it's right about $597. So I say 10 to 15%. I really should probably be saying 10% plus because no one freaking knows, right? The only thing we know whenever we start collapsing and having a correction, only thing we know is that this is a level at 580, this is a big level at 550, and this is a big level at 500. You know your levels. And you say when you get around there, if you start bouncing and then you start getting your indicators here in the sweet spot like me, like I have with the matrix, we get in the sweet spot, then we start curling up on the histogram, right? And we start doing this action and we start climbing like this and flipping, right? Then I know, okay, we're getting close to a bottom. And then once we flip, make a bullish cross, get a bull trigger, then I know we're back to the up and up. And when we're back on the up and up, this is where I'm no longer trading with 20 to 25 to 30% of my capital. This is where I'm trading with 100% of my capital. I'm taking advantage of this move up, of this move up, of this move up, of this move up. And I'm avoiding these moves down. And I'm avoiding this chop area. I'm avoiding this chop area. I'm avoiding the move down that comes from this. As a trader, I am looking to be a biggest player when we're in clear uptrends because it is easy to make money in a bull market, right? Then why the fuck wouldn't you make easy money in a bull market? Why are you doing all this, then giving back all your gains in this choppy garbage, and then whenever the market collapses, you're 100% in and you lose it all? You crushed it here in 2025 for the rest of the year from April, May to the end of the year, and then you fucked up like the end of 2025 into 2026. What are you doing? And this is what I teach in the High Five Collective. I have these indicators in the High Five Collective. This is my trading Discord. Again, if you want access to that, link is below if you want to be part of that. But honestly, guys, I've been saying this to everybody lately. Like, I don't give a crap anymore. I don't want degen gamblers in my community. If you want to be a legitimate trader, if you want to really be doing this, and you're okay with sitting there and realizing, hey, in here, we're just going to day trade, or we're just going to do small trades because shit's fucked, shit's not okay, then okay. Instead of where some degens and gamblers in my community, they're sitting in here like, when's the next trade? When's the next trade? What are we going to do? Itching for their next hit, itching for the next fix. Come on. Let's make money here. Let's count our dollars here, and let's avoid this. Make money here, count our money here, avoid this, and then right back to it. These bull swings, usually there's at least one, sometimes two, every single year. These bull runs, usually at least one, if not two, every single year. So you're going to have opportunities. We haven't had the bull run for 2026 yet. This was 25. The next bull run is coming in 2026. And you are either going to be in the trading community or over on Value Snapshot in the investing community with all the tools and getting ready now for the stocks that you want to be invested in, or getting now ready with us in the trading side of things, getting ready for the next upswing to take advantage and make a shit ton of money trading or make a shit ton of money investing. Okay? So you're not too late. If you want to join us, come join us. But don't be bringing that degen gambler garbage that people have on X, because I'm just fed up with it. So that's it for the video, guys. I hope you learned a lot from this. I hope I was able to help you in some way, some fashion, whatever. If you like this video, drop a like. If you want to see more videos like this, going over markets, going over my strategies, just drop a comment below saying strategies or strategy, and I'll go ahead and do more videos like this. If not, then I'll probably just keep these for the community and not put them out to anybody, and I'll just go back to talking about investing in stocks for the long term, I guess. But let me know. Love you guys. Take it easy. Stay safe.